I invest heavily in REITs, and that's what I cover primarily here on YouTube. I think that they're offering a historic opportunity with their valuation still at a near decade low and could enjoy significant upside in the coming years as rent growth accelerates and the Fed cuts down interest rates further. But that does not mean that my entire portfolio is invested in REITs. I'm still wise enough to recognize that every investment has risks, and portfolio diversification is key to optimizing risk-adjusted returns. With that in mind, I'm today exceptionally going to cover one of my biggest non-REIT investments going into 2025. Hey everyone, this is Jussi. I run a small investment firm that specializes in REIT investing. In today's video, I'm going to give you an update on Patria Investments, ticker symbol PAX, which I have previously covered on this channel. It is still one of my largest investments. I have bought a lot more shares following the recent dip. And in today's video, I'm going to explain to you why I think that it's such a great opportunity. So let's get straight into it. Patria is the Blackstone of Latin America. It's the leading alternative asset manager in the region, managing over 30 billion worth of private equity, infrastructure, credit, and real estate investments. So just like Blackstone, it's in the business of managing capital for others in exchange of fees, and therefore the more capital it can manage and the more fees it can earn. And we think that Patria is in a strong position to grow its assets under management in the coming years, both organically and by acquiring smaller asset managers at low valuations that should be highly accretive to Patria's shareholders. Right now, Latin America is attracting more and more investments because it's seen as a safe haven in a world of growing geopolitical tension. Russia is waging its brutal war of aggression against Ukraine, with North Korean troops directly supporting it, and China is helping Russia by funding it. At the same time, China is also threatening to invade Taiwan, and the Middle East is a complete mess. And that's how Latin America stands out in the world today. It can serve as a valuable portfolio diversifier for investors during times of uncertainty, and it's attracting a lot of capital at the moment. Moreover, it also benefits from the growing trend of nearshoring, as increasingly many companies are now moving supply chains away from places like China into Mexico. As a result, there is rapidly growing demand for investments in this region, and Patria is well positioned to capitalize on this growing demand. It's the largest local asset manager, it has a multi-decade track record of excellent results, has a great reputation, and it has diversified platforms with funds for most alternative assets and a large distribution channel to raise capital. And this makes Patria confident in their recently issued guidance to roughly double their fee-earning capital over the next 3 years. And if they pull this off, this should result in about 15% average annual growth in their fee-related earnings per share. And to top it off, they expect to pay at least 60 cents per year in dividends at the same time, which equates to a roughly 5% dividend yield right now, and they will also deleverage their balance sheet down to 1x debt to EBITDA. So if they achieve that, the returns could be very significant in the coming years, because you add up the dividend and the growth, you're getting already to 20% average annual total returns. But I also think that the company is undervalued, so you have further upside on top of that, and I'll discuss that more later. But how achievable is this growth guidance? Well, here it's interesting to note that the company set a similar 3-year target when it went public in 2021, and it easily surpassed its targets. Therefore, the company now has a history of under-promising and over-delivering. They actually grew far faster over the past 3 years, and that's despite having a weaker distribution channel and fewer products to offer to investors. Moreover, Latin America also didn't have as strong of tailwinds to attract new investments. Therefore, I think that this guidance is highly achievable for them, and again, as I said earlier, if they pull this off, the returns could be very significant. Even assuming that their fee-related earnings multiple remains intact at the very low level that's currently at, they could generate 15% growth plus a 5% dividend yield. That gets you 20% average annual total returns on a constant multiple basis. But right now, the company is trading at just around 9x its fee-related earnings, adjusted for its accrued unrealized performance fees. And that's very low in the alternative asset management space. If you look at other companies, its bigger American peers like Blackstone, KKR, Carlyle, Blue Owl, and so on, they are typically trading at closer to 25 to 30x fee-related earnings. And I would add that that's despite having typically more leverage on their balance sheet and weaker long-term growth prospects. Patria is so much cheaper because Latin America is out of favor, and it's perceived to be a riskier region of the world, and as a result there is less demand for their stocks. But I would note here that the risks in the case of Patria are well mitigated by the fact that it earns most of its revenue from hard currencies like the USD. It's also well diversified by country and strategy. I think that as the market sentiment for Latin America improves relative to other regions of the world in the coming years, we'll see Patria repriced at a much more reasonable valuation multiple. And now taking relatively conservative assumptions, let's assume that it's going to grow its fee-related incomes per share by 12%, so below the guidance of 15%. It pays the 5% dividend yield, and then it reprices at 14 times instead of the 25 to 30 times of its peers. That will still roughly double your money over the next 3 years. I think that this is the best risk reward that you can get today among alternative asset managers. And if you know anything about this space, you'll know that most of these companies have been highly rewarding over the long run. Companies like Blackstone has massively outperformed even the S&P 500 since going public, and I expect similar strong results from Patria going forward. Note that I will soon fly to Brazil to conduct some on-the-ground due diligence on the company. I expect to meet other local private equity professionals, perhaps also the management team of Patria, and tour many of their biggest assets. And if you want access to exclusive on-the-ground research on the company, you can join High Yield Landlord for a 2-week free trial. We have already posted one exclusive interview with the management team of the company, and you can rate it as soon as you join us for the free trial. Otherwise, if you could please click the like button, that will help me a lot to keep on growing. Subscribe to the channel. Thanks so much, and see you at my next one. Bye-bye.